All right, traders, so the lesson here is on average true range. Again, apply the very simple broad market cross-platform indicator called average true range. The average true range takes into account overnight gaps higher and lower, and actually was developed to include when markets gap overnight. ADR, somebody asked about previously, is average daily range, and that's the literal high to low during the day session, whatever that day session is for that market that you're trading. Most U.S. index futures markets are 8:30 a.m. open time or start time, and then a 3 or 3:15 close time. Some of the metals, the grains, close at 1:15, 2 p.m. Central, and so on. So if it's an average daily range, then it would be the range that occurs during the day session for that instrument. That's all we used to have until 1997, when the CME introduced the futures markets, the Globex session. We then had overnight trading rather than just a pit traded session. So average true range at the bottom, I always use a 7-day ATR. We're going to look at the S&P 500. I want to look at the 7-day ATR on the day prior to the current session. So the current day is trading right now. The close as of yesterday is right there. I pull in my data box right here. I take the value of the 7-day ATR, which at this point I round up was 16 points. ATR 7 times 20%. So in this case, 16 is the 7-day ATR. Multiply it times 20% equals 3.2. Then add the 7-day ATR. So let's just use the numbers right here. So again, I'm going to round up, so we're going to use 16 as the 7-day ATR in the S&P 500. I will then add to that 20%, which is 3.2 points. That helps me arrive at 19.2. So this will be my projected high or low. Then what I do is I immediately come in and I take a look at where is the market right now. So you can see today we've already traded a high to low trading range. The highs are in at 79, the lows are in at 68. So basically it's a 10.5 or 11 point range. 11 points is already 60% of the 16-point 7-day ATR. So by the time we even get in here and get the opportunity to trade during the U.S. day session, we've already attained more than 50% of what's likely to happen in these markets. So then what I do is I say, okay, if the highs of the day have already been met in Globex, in other words, if the current high of day, which is 1979, I'm going to round up, then I take the 1979 minus the 19.2. So 1979 would put us at 1960. So that's my projected low of the day. That would be a profit target on any short entries, and that would also be a potential long entry with another qualified signal. If I'm wrong, and in fact the lows of the Globex session turn out to be the lows of the day, okay, 1968 quarter, then I add the lows to 19, so take this number, add it to the lows. So the low at 68 plus 10 is 78, plus another 10 is 88 minus 1. So it's 87. So my projected highs would be 87. Very quickly, I take a look left from the 87 handle, and I say, okay, if the market were to rally to 87, yesterday's highs, 88. So I'd be rallying right back into yesterday's high, which obviously would be a structure resistance area. So yesterday we did the exact same thing. We took the highs at 88. We projected the lows at 70. The lows were 71.50. We bought the SPY calls as the market drove down in the Globex into that level. So right now we're seeing a little bit of a rally off of those numbers. We'll see if we pop back up higher. So very, very simple. Regardless of the market, regardless of the time frame. Why is this? I did a volatility study years and years and years ago and found that most markets next day price action is contained by 120% of the 7-day ATR, 80% of the time. So 8 days out of 10, the next day will be contained by the 19.2 points. Okay? So right here, our average true range was 15. 15 times 20% is 3. 15 plus 3 is 18. Then we come in and we take the high, 1999 minus the 18. That puts us at 1980. The lows of the day, 82.50. So was this day contained by 120% of the 7-day ATR? Yes, it was. And we could go back and look at the last 100 bars. 80 of those daily candles will trade inside of that 120% ATR. So I use it, I call it my rule of projection. I project highs or lows, and again, I look for qualified trading signals at or around those numbers. Yeah, thank you, Lee. So that 1970 yesterday was spot on. And again, remember, as we look at the volatility study, it ranges, okay? So if we say, here is my projected range for the next day. And right now we're just going to say that this is going to be a 19-point range. Remember, most of the clustering occurs at the lower end, obviously. Okay? So the next day, let's say 23% of the time, 50% of this range will contain price. And then maybe 18% of the time, 60%, and then 70%, and then 80%, and then it starts to drop. And then 90%, boom. But only about 3% of the time do markets trade outside of that 120% ATR. So again, all I'm doing is I'm using that as a high probability turning point for the market. Again, if I'm long and the market's rallying to my rule of projection high, I look for that as a target. Now, 3% of the time I'm going to be wrong. There will be times, obviously, where the market not only trades above 120%, but goes 130, 140, 150% of the average true range. But again, gang, that's a very, very low probability occurrence. So I'm really not that interested in those days. When we do get those 180, 190, 200% or 2 ATR moves, that's why Rod right here the other day said we had another 10 points in the S&P that it rallied right after the news that they weren't going to leave England. Okay? So it's like, okay, well that's highly unlikely to be or to get a continuation. This really isn't a news event. Now, if we go back over here, average true range was 20. 20 times 0.2 is 4. So a 24-point high or low. The next day high to low range, 91 to 17, that's 30. Okay? So this day we did trade outside of it. Right here was another day. But again, just go back over, go to 10 bars, then you can extrapolate that. Or go through 40 bars. But the key is that right here today, I do not use today's number because average true range is a dynamic indicator. So this thing is going to go up and down today, intraday, not dramatically. I use the day prior. So today is a Wednesday. I want to use the 7-day ATR as of the close on Tuesday. I round up, multiply times 0.2, add it to the 7-day ATR, and then use that to project. Yeah, I've got an indicator that I've created. I call it the rule of projection, the ROP. Yeah, and I can throw it on any chart, any time frame, any market, and it just grabs the 7-day ATR of that particular market and then plots projected high, projected low in green and red or blue and green, whatever you want to use on the chart. It's really nice. That way I've got a visual reference because, again, intraday, I used to plot all this stuff on the chart. But if you don't, then intraday you wind up losing perspective, and so it becomes a little bit more difficult. Yeah. So it's a visual reminder. All right, so there's the S&P 500. Now, again, part of the reason that we got long right here, Rod bought the spider calls, is because of the significance of this level. We had a rule of projection low. Market was extremely oversold. Look left, we have relevant market structure right there as well. Okay, so we want to be buyers at that point. Remember, we bought the puts back around here prior to 9/11, made a little bit of money. Then it went in our face. We added up here. He traded the IWMs for $700-800 in profit. So my $10,000 is now worth around 11 or 12, whatever it might be. But then last night he bought the calls here, and I'll let him tell you about that. All right, so now let's go to NASDAQ 1214. Okay, so prior to yesterday, the NASDAQ. There we go. So we were at 42.28, so I round down. So 42 times 20% is 8. 42 plus 8 is 50. Okay, if the highs of the Globex were in yesterday, the high at 40.61, we projected 40.11. So again, we didn't go down to our projected lows. But was that price bar contained by the 120% ATR? Yes, it absolutely was. Prior session, we were at 40. So this would have been 48. Take the highs here, 40.83, projected lows, 40.40. We went to 40.36. So about 4 points through it, or about 130% ATR. And then again, from that low, you see that we traded from 40.36. We popped up. The high was 40.61. So that was a 25 point or $500 move from the 130% ATR to the high the next day. Okay. Okay, so NASDAQ not quite back down into that level as we've watched for the last couple of weeks. The mini Russell 2000 weaker. So this Russell 2000 here, gang, we got to keep on the lookout. May not happen today. We may get a little pop here. But anything down around that 1100 handle, I like it a lot. Now, let's go ahead and pull this in, because if we roll over today, this is likely to have some relevance. So we're at 16.5 times 20% is 3, so that's 19.5. I'm going to just round up to 20. So our highs of the day so far, 1117.60. So that'd put us at about 1097. Again, 1100, 1099 is a big key level. So I've got 120% ATR at previous structure support at a big honkin' round number, 1100. I like that level. If we roll over and start to decline down here, then I'm going to look for buy signals. A, I can buy the mini Russell intraday and day trade it off of that level. B, I can buy it if I have the equity in my account, and I can swing trade that for a pop back up to just even the 382 retracement of the last leg down. Produces nice opportunity. There was the swing high that preceded this decline. I'm going to assume that we come down to that 120 or that 1100. Now I'm going to pull in the 382 Fibonacci retracement, and you can see that that's resting at 1123. So I could easily risk 5 points down here to make 20. So it's a 1-to-4 risk-reward ratio. 5 points puts me well below all of this structure, and again, that would be 150% ATR to get my 5-point stop, and that's only about a 2% probability. Again, doesn't mean it won't happen, gang. It just means we're just looking at historical volatility. By the way, you want to take a look at fibs. Watch this. From this swing low to this new structure high, 127, we went to the 1414, beautiful relevance. Swing low right here, this new structure high. So right here, we see the 1414 relevance. I'll pull that out, put that in, boom. So we go impulse, higher high, higher close. We took out this swing. We pulled back into a higher low, went right to the 1414. From this swing high to this low is equidistant. It's the same that we saw right here. The value of that retracement duplicated right here almost to the tick. The value of this impulse move equidistant here, and then we rally here, 127. Value of the retracement again right there. and then we pop again, and this time again we go to the 1414 right before we turn. There you go. Lee just mentioned 3 drives. Perfect. So mini Russell traders, 1100. The final way I could participate in that would be obviously to buy the IWM calls. If I'm an equities trader and I want to trade the options, take advantage of that. Let's go look at crude oil, 1114. Gain some perspective here, higher time frame. And normally on crude oil, gang, we can do this on the daily, but certainly we can get a lot of analysis done. You see the daily right there, as we've rolled into the November contract, we're at $1.50 a day. Again, $10 a tick, 152 ticks is $1,520 worth of opportunity. So we're basically in no man's land. 150 times 20% is 30. 150 plus 130 is 180. If the lows of the day are in at 91.40, 180 puts us at 93.20. If the highs of the day are in 91.76, then $90. So back down against this structure support. So if we roll over, this $90 presents nice opportunity. Now let's get rid of this guy. Let's come over here and grab our DSR. Yesterday we popped beautiful gap fill trade in the S&P 500. We rolled right up. We talked about putting part of the position out. Opportunity to buy the SPY puts. As we were filling the gap right there, we drove through it, and there was our 1988. And again, gang, there's my cluster 3 trade, SOS3. RSI overbought. Turning point, 2 bars later, black tip, 86.50 short entry. New structure lows, lower high. New structure lows, lower high. Then we pop back up to that previous structure at 85, and then as we dropped right here, there were the opportunities right there to get long on the spiders. All right, now let's come up to date, and you can see we had this little pop right here right after the close during the Globex session, rallied back up. And now from yesterday's close, we're going to have a small gap, not a lot going on. So if we roll back over any short trades on the swing trade, right here was our first short entry against that 78. Again, this is very early. But that short entry right there, we'd look for targets back into the 1969 handle. Lee's asking about how many bars between the turning point and black tip. I call it a cluster 3. Is what a lot of our Forex traders are using. I've got it built out in a strategy. That's the cluster trader. So typically I look for the turning point followed 1 or 2 bars later by that black tip. And typically when we get that, that's going to be what I want to say, kind of a quick reversal. All right, let's go take a look. Beautiful trade yesterday, gang, in the NASDAQ. And again, you got to watch these DSR levels. They're just fantastic for some sideways trades, high probability reversal points. Tighten the NASDAQ down here. So right there we popped. We talked about the 55 to 60. I shorted them right here. Barely got dinked out at 60 quarter as the market went to 61, and that wound up being HOD. So I literally bought the highs of the day or 1 point off of that. But from there, it gave us another opportunity right there to sell them back at the same price point. And then obviously the rollover, we did finally get down to that 1430 or the 4035 handle. We had our buy signal yesterday for the gap fill. And again, just a beautiful sideways trade right inside of those DSR levels. Now, where are we here? No man's land. We're 50% between our DSR resistance. So again, 55 to 60 on the sell side. And then if we roll over right here, I want to be a buyer around 32, 35s. If I get a buy signal at 33, 35s, I have to place my stops below these lows, which is going to require about a 7 or 8 point stop. Okay. Normally intraday, we're trading these with 5 to 6 point stops, 5 to 6 points target 1, and then the balance off at the extended target. Yesterday at my 55 entries, I did a 54, 55. I put my stops at 5 points, and again, had I gone 6, I would have been In like Flynn. All right, let's go look at TF. Love the TF, love crude oil because of the $10 a tick. Good directional movement. I like volatility. Crude oil, nice bear continuation. Now you can see the difference in the two charts. Crude oil, Mini Russell, continued bear sell-off. Great example. I had a question yesterday. If the DSR support levels break down, then what do we look for? Now, this is pre-market right there at the 830, but you can see we go new structure low. The market gaps lower. We rally to fill the gap, and the gap fill occurs at a DSR support. It's red inside. Now we're anticipating it's going to be resistance. Now, this would be aggressive. Why? I don't have an overbought RSI. I don't have turning point black tip. So this would be an aggressive trade. I'm probably going to skip this signal. However, later on in the session, we do go overbought RSI, SOS1, turning point, SOS2, immediately black tip, sell next bar market puts me short around 1130, targeting the DSR support level right here. That's $600 at 24 target. And then we roll over. All right, so we've got the open. Let's go check our gaps. And then right now you see the mini Russell. Anything against that 1118 handle, I'm going to look for short entries. Stops above 1120. And then we'll look for this back down into 1110 intraday. All right, let's move this guy over. All right, gang, so take a quick look here. Again, remember, the NASDAQ purposely showing you that gap open. So there's a nice gap higher here. Let's watch for bear rotation, black candles. If we rally back to this 55.56, then we look for a sell signal, looking for the market to fill the gap. Cluster traders running top left-hand side right there on the 200 tick. I'm going to manage it bottom left-hand side right here. Okay, crude oil right in the middle, 150 tick chart. Got the range trader applied. And then we'll watch the Brickwicks over here. Rod will keep us apprised of Brickwick signals. I'm testing a scalper strategy on the 6x1 S&P right now. And then we'll talk some stocks. Bud, you got anything you want to cover? Okay, so the Russell, look left right here. I've got spike highs just under 19. Got to respect that. Okay, we closed yesterday down here around 1110. So again, we're gapping higher. We're looking for a qualified signal for the gap fill. Yeah, here I'm going to go to a different account real quickly. I'll put on a 2-lot for the gap fill trade. I'm going to pop my stops above this 1120 handle. Yeah, pretty good risk, but again, I've got great upside potential here from the 18s. I'm willing to risk 220, 240. Target 1 right here makes me over 200, right? Almost 250, so it's about 1-to-1 risk reward. If we fill the gap at 1110, then I make 700 on the second contract. Yeah. All right, and then what we'll do is we'll come back to the 3034 account, and that'll keep us apprised of what goes on with the level 2 strategy. Okay, as NASDAQ's rallying into our structure resistance up here, gang, we're overbought. So again, DST traders start walking through rules of engagement, the ROE, right? What do you do over and over and over? So RSI's overbought, SOS1. Where's the market relative to? I'm at our key resistance area, SOS2. Now I want to watch for a turning point black tip, back to back, or a black tip and then a color rotation. Yeah, so we can just sell the color rotation, which would be white back to black. Yeah, one of my biggest challenges. I've got ADD. I'm always interested in learning. So back in the day, you know, I dropped 25 or 30 grand on systems and education. Then I lost over 6 figures trading. And the thing that I would do is I would constantly go and look. When I looked at a chart, my main thing was, where can I trade today? If you ask yourself a question, do I see an opportunity to enter the market? And you've read one book, 2 PDF files, watched 3 seminars, the answer to that question is always going to be a resounding yes. If instead you go to a chart and say, does my trading plan show an entry here? You will always only have a yes or a no, period. So what I would do is I'd look at a chart and I'd study patterns and I'd see a head and shoulders, so I'd trade it. And if it was a winner, then I would retain that information as positive. And we move towards things that make us feel good, right? So I'm moved towards pleasure. Well, I just traded a head and shoulders top and it was a winner. Beautiful. Then I would start to seek out more head and shoulders tops. I did no testing. The other thing is I would seek out head and shoulders tops. If I couldn't find one on a 3-minute, I'd go to a 5-minute. Couldn't find one on a 5-minute, I'd go to a 10-minute. Can't find one on the 10, I go to the 60. Nothing on the 60, 120, 240, the daily. You know the story. Then I say, man, these stupid head and shoulder patterns don't work after 3 losers in a row. But maybe in reality, I traded a 5-minute on the S&P, a 15-minute on the Dow Jones, a 1 hour on a stock, and actually I'd had 3 different markets or instruments, 3 different time frames. Now, if I just stuck to a 60-minute, I might find that trading every head and shoulders pattern on the hourly chart only between these times, start and end times, actually is wildly profitable. But I'm flying all over the place, looking at every time frame, every instrument, just looking for an opportunity to trade. Communication with one of my clients today. He said, yeah, the only downside is, I said, you're trading too volatile a time frame. 150 tick in gold, you can't trade SOS 3s. It's too volatile. You've got to wait for an SOS 4 minimum. Go to a higher time frame, 610 tick. Yeah, but if I go to a higher time frame, then, listen closely. If I go to a higher time frame, then I don't get as many signals. Well, are you interested in a bunch of signals, or are you interested in being profitable? You're right. I'm interested in making money. Great. So then if you only get 2 trades a day on the 610 tick, but you have a higher winning percentage, your average winners are bigger than your average losers, now you're a successful, profitable trader. Wouldn't you prefer that over, yeah, but I like to trade 10 times a day? So again, what are you focused on? Are you focusing on the right things? Very, very critical. No, I've literally had traders not following the rules of the system, back test, and know that the strategy or a signal that they've tested works, and yet they choose not to follow it. And I've heard them, I mean, this has happened 100 times if it's happened once. Yeah, but when I do that and I follow the rules, I don't feel like a trader. Again, I don't care. You know, if I had a guy in one of our prop rooms that got a capital allocation say that, I'd say, well, listen, you're about to feel the door hit you in the butt as you leave, because that's the most ridiculous thing I've ever heard. But again, we want to be able to watch CNBC, and we want to be able to dissect the markets and maybe speak about them and be able to move in and out of trades. Like, listen, gang, I'm telling you, especially in the beginning, A, if you're brand new, B, if you've just been losing money, you've got to get yourself to a point where you're consistent. You got to have a couple winning weeks in a row that leads to a winning month. Then take that winning month, string 3 of those together and have a winning quarter. And then add another quarter in your first winning half year. Get that stuff down and do it with consistency and repetition. When that happens, then you can look to diversify. Either add another market with your existing trading signal, or add another signal and trade the same market. Become an expert in that one market. I've got clients that do nothing but trade the mini Russell. Max is using our Constellation software, and he's trading 4 markets. But the software is showing him where to be a buyer and seller. Then if he gets a signal, he puts the trade on, places his target 1, target 2, stop. If target 1 is hit, he trails his stop. And he's already got his rules for how and why and where he trails the stop. He doesn't have to think about it. It's automatic. Again, that's why in all my seminars for 15 years now, I've used the stop sign analogy. We had no idea when we were 2, 3, and 4 years old what a red octagon with 4 white letters meant. Then we were taught what it was meant. And now every time we see that exact same thing, it has a very specific meaning. And then because we were told what action to take based on that meaning, we now stop our cars, thank God. If we didn't, we'd be in big time trouble. In fact, nobody would leave their homes because they wouldn't be self-assured that everybody else was going to follow the rules of the road, right? Part of the reason we even have rules. So rules in your strategy allow you to do the same thing. It allows you to build a belief. When I go back in to this chart in the mini Russell and I say, okay, if I only took the retest of the DSR levels and made sure that every time I had an RSI overbought, turning point, or black tip, and then a double top, if I sold the next bar and I used a 2 ATR stop versus a 2 ATR target, and I looked at 100 trades in this market and saw that 55% were winners, but my winners were twice as big as my losers, I know I've got a winning strategy. Now I've just developed a belief. I've internalized a belief about that particular strategy. Does that mean that that particular strategy is going to work exactly the same way in gold? No, gold is a different market. Now, what if that time frame was, or that period of time was a sideways channel trade? Well, I know that this strategy's strengths are when the market is non-trending. So then I have to be prepared. What do I do in a trending market? How do I identify it? It's really very simple, but it does take time. All right, let's go back over here. This mini Russell's rolling over. I should be approaching my first target. We did the double top, so I'm going to take partial right here, gang, on my go trade. There's plus 190 on half. I'm going to trail my stop down. I'm going to leave it at 1960, respecting the swing high over here. Now remember, I'm looking for this guy to drop down here, probably around 1110.50. If we break structure support here, then I can get more aggressive on my trail stop. Yeah, NASDAQ traders, I didn't get it on, but we discussed it. So your NASDAQ trade's rolling over. You're moving towards target 1. Let's go look at your NASI. We got our extreme overbought condition with bearish divergence here, right into that same level that we discussed pre-market. There's your color rotation, white to black. Sell them at 54.5. Take 5 points on half, 49.5. You're up $100, and now opportunity to trail your stops. Okay, so NASDAQ, target 1 attained, stops trail. Let's see if they now trade below the open and then roll over. 40, 40, 50 is extended target. There we go, baby. Beautiful. Nice sell signal there. Again, just following ROE. All right, I'm going to trail stops here. I'll go 66.70, locking in a little bit. This Russell can easily pop $200 to $300 off those lows and then roll back over. So I'm not going to get crazy aggressive with that trail stop. I'll go 16.20 now, lock in another $90. We're up 460. My RSI is buried oversold. NASDAQ rolling over, top right as well. Yeah, so with this extreme oversold on the RSI, I'll get more aggressive, locking in $200 now. And again, I'm looking for an extended target down here at 1110. You see, gang, that 1180, I'm only $180 away. Big directional move. Yeah, I'm going to get really aggressive now based on that extreme oversold condition. We got 480 in the bank, so it'll be over 500 on the total trade. We got 450 locked in on this one, and if we get a further decline, we're in business. NASDAQ traders, there's your 40, 40, 50 target. So NASDAQ all flat, bear rotation entry, right back into our resistance level. All right, so I'm going to leave this one out there. There we go. So Russell out on the trail stop, all flat there. Let's go back over here. I just got long on my strategy. So my level 2 just got me long right here. Counter trend. Now again, we haven't quite filled the gap here, so I'm going to cover half of that position. My protective stop is 11.10.5. If I'm long, 5's always rolled down to 4. And then my profit target is 11.17.7. I'm going to pull it to 4. Just looking for a retest of these highs. Again, gang, I'm not real excited about this signal because I'm not at a support level. If I got this same buy trade down here as we're filling the gap and we're at this swing lows, then I'd be a lot more interested in that trade. But again, I'm going to let the strategy put me in and then just manage the trade based on my rules of engagement. All right, now let's update a little bit right here. So here's our mini Russell. Now again, this was a little pop right there in the Globex. So basically, the Russell just tested major support. We obviously could roll lower right here. So if I get a pop back into this 18 to 19, I'm looking to be a seller again. Let's go take a look at our crude oil market. Update there. Crude oil's pulling back after the gap is filled, and there's the November contract in crude oil, 1,000 tick, complete sideways trade. Again, I love these market conditions. Every test of that DSR level, we want to be sellers. Yesterday, we looked for the short entry into that 92. Somebody was long from, I think, 150. I think you covered partial at 92 based on our analysis there. So we popped up. Nice sell signal here to DSR level. 190, 35 tick rollover. Sell them again, another 35 ticks. Sell them here, out on stop minus 22. Nope, didn't get stopped out. Yeah, we went to 09, so 92.11 would have been the protective stops. Then we rolled over. So let's tighten this guy up. Now roll it to the right. So slightly bullish here in most recent trade. You see our Big Mo primarily has been green. And again, we're hanging out in no man's land. So if we get back into the 91.80s to 90s right here, watch for qualified sell signals. And again, gang, just get in the habit of asking yourself if-then questions, right? So if this market breaks down, then where is it likely to head? Well, here's a static swing high to this static swing low. So it's real easy for you to measure that leg. We'd expect a break below the 91.28s. We get a quick move to 107s. And now you can see that I've got a 90.80 1618 target right down here at this DSR level, swing lows from yesterday at 8:30. So I've got confluence. I've got market structure. I've got a DSR support zone. I've got a 1618 Fibonacci extension, all within 5 cents of that same area. There we go. Yeah, let's move this. And again, I want to show you the cluster trader right here. So you can see that we're breaking down, but again, we worked on the bars yesterday, and this is exactly what I was showing you. When we are in a bear continuation pattern, in other words, we've had 3 to 5 consecutive black bars, then I look to sell this first rally. So I would have sold this rally here, participate in this sell-off, and you can see we've now taken out our support zone. We expect to move to bid zone 1, which is 91.18. If we don't quite make it, we'll look for short entries back here. There it is. There's bid zone 1 tested. Now remember, we've got a level down here at 90.80, and I've got a bid zone 2 at 90.90. Yeah, perfect. Yeah, nice little start, gang. Great little start. And again, take a look at your day of the week. So we've just done about 600 in the Russell. Should have done about another 200 in the NASI. Yeah, no reason to trade both. It depends on your account size. Yeah, I missed my crude oil trade. So again, here it is. This is the benefit. Again, I've got the automation just about done on the range trader. But see, gang, right here. So on the range trader, when that price breaks below support, it does not get to OZ or the bid zone 1. We then look for this rally right here and look for a short entry. Now again, I did get my RSI overbought. Notice I did not get my turning point black tip. So if I sold them right here, I would have reduced my size because it's more aggressive. Yeah, that's exactly right. Lee's asking about DSR levels on the lower trading time frames. I've got the strategy running, Lee, so I'm just letting the strategy put me in the positions and then I manage them accordingly. And I'm building the strategy out on this range trader. So I really wanted to invest my time and focus right there. The DSR levels, I'm focused now more on the 1,000 tick, and then the hourly as we've kind of looked at throughout the day.